Bringing our next guest, we got some breaking news. Jenny Horne, markets correspondent, here joining us. Jenny, we got some PPI data. What do you got for us?
So PPI, I think, following what was objectively a well-liked CPI yesterday. I'm not sure if I would necessarily say it's trending in the right direction, obviously, but still a good number. Today, PPI showing that final demand rose around 0.4% for the month of November. Seasonally adjusted, we did see that the U.S. Bureau did report that final demand prices also increased around 0.3% last month, 0.2% back in September. So on an unadjusted basis, the index for final demand advanced 3% for the last year. That obviously ran through November. Well, that was the largest really rise we've seen since moving about 4.7% on a 12-month basis through February of 2023. So November, nearly 60% of the overall broad-based rise in final demand. Prices can be attributed to the 0.7% increase in the index for final demand goods. Prices for final demand services moved up a modest 0.2%. However, the index for final demand less foods, energy, and trade services did rise around 0.1% after rising around 0.3% back in the month of October. But on a 12-month basis that ran, of course, through November, we did see that final demand less foods, energy, and trade services advanced still 3.5%. I mean, this number is definitely above expectations, and I would say arguably showing that we are trending in a way that I would think it would not be favorable to these markets. But then again, yesterday's number was hotter than October. We seem to shake that off quite well.
Yeah, in line was is a bonus for markets at this point. But yeah, if you look at that final demand 3%, estimate was 2.6%. Ex-food and energy, 3.4%, so a little bit hotter than expected. Will that flow over into the CPI data next month? And then jobless claims came in, 242,000 here for jobless claims versus 224 last month. A little bit above expectations last week, and then a little bit above expectations now. Stocks initially rallied on that news, now about the same spot where they were. We did get yields ticking up here a little bit, or ticking down a little bit from session high. So we'll continue to watch that. We're going to break that down later in the show. But Jenny, we got a couple stock stories here to kind of hit on here. The first one, some upgrades in the beverage space. And I looked at the charts on Coca and Pepsi. These charts haven't been matching the gains for the S&P 500 this year, that's for sure.
I was going to say, talk about a space that has not been getting any sort of reprieve this week. I mean, we've seen some of the rotation. I don't know if I've necessarily seen it this week, but I know it's been a theme discussed that we've seen this rotation out of major tech and some of these maybe lagging semiconductor stocks into the small cap names. There's been a favorability there for some of these names that have really underperformed the market this year, but not really for a lot of these beverage stocks. As you know, I do tend to look at the chart of Monster Energy quite frequently. Celsius has also been, a disappointment. So when you look at then PepsiCo and as well as Coke, Keurig Dr. Pepper, Deutsche Bank with a broader note on all three, actually upgrading Pepsi while also upgrading Coca-Cola and raising its also price targets on all three of the stocks. They are becoming more positive on non-alcoholic beverage names, but they do believe that specifically PepsiCo's ample productivity and cost flexibility should present a cushion now moving forward while still allowing for investments to drive this overall sequential improvement. They do also expect targeted pricing and other commercial investments to yield snowballing returns alongside improving customer confidence and immediate consumption spending in 2025. So when it comes to Coca-Cola, they said that the brand's momentum is still exceptionally strong, and Keurig Dr. Pepper, they do say that they also are seeing some of these abating headwinds start to ease, especially with the returning facilities and more of this like coffee normalization, obviously with that Keurig exposure. So three different notes on three similar stocks and three, I think, ways in which they see more upside into 2025. But you'd have to hope, because, gosh, if you want to talk about the underperformance, the disappointment, we've seen it in no greater sector than it feels like staples, which are supposed to be our stalwart of some of this volatility.
Yeah, and you wonder if maybe we're going to see some rotation into names, because it doesn't feel like anybody wants to get out of the market. We've seen some underperformance. Coke was basically only up about 6% so far this year going into this upgrade. Pepsi was actually down negative 7% so far this year going into that upgrade also. So maybe a little bit of rotation needed at this point. But Jenny, the next one that we were going to talk about is Google Alphabet. Really good news this week. one of the Mag 7s that hit all-time highs today. And I remember, Jenny, just a couple months ago, after it hit all-time highs in midsummer, everybody was beating this stock down, even though they reported pretty good earnings that, hey, ChatGPT, Bing's going to take a lot of their search business. But now they're actually coming up with some innovative things this week, right? I
think that might have been the most ridiculous narrative I heard this week, that they were going to start stealing. I mean, I think that maybe they might be forced to give up some of that chokehold they have on search. But I don't think that people are actively switching over to Bing the way that people were talking about this summer. So I agree. New all-time highs this morning, like you said. I mean, this name has had a pretty nice run this week. And even, I know yesterday we saw a pretty broad-based tech rally, but even Tuesday we saw a really nice move to the upside in Alphabet on the fact that they're expanding their quantum computing by offering, the various tools, but specifically this Willow development, which they said can perform computer processes that would have taken prior septillions of years, which is the craziest number that I think I might have heard this week, because that's basically how advanced this technology is. So this will be launching in these various Gemini models this week. I do think that this is an extremely important piece of news, especially considering we talk about capex for these companies and the ways in which they're spending. Alphabet is one of the most substantial in that world. So you have to tell me what you're doing with your cash. And I think that there's been a lot of this regulatory overhang with this stock, where there's fears that, well, it looked like if Alphabet gets broken up. I think that we're going into an easier regulatory environment. Alphabet has been able to handle the DOJ and FTC every single time. Maybe I have blind faith, but I think we were giving too much credit to that. So I think something like this, where you actually see Willow that's going to disrupt or change various technologies in which it competes with, that to me is something the street should be paying attention to. So I'm actually glad to see that this nice momentum has held throughout this week, because I think this is pretty big news.
Yeah, and just going back to that narrative that people were going to stop using Google for search. I mean, Google has their AI Gemini built into search now. It's usually one of the top things that pops up. So,
and it's amazing. Yeah. It's the way you can search for images now, and it can find exactly what you're looking for. It's amazing.
Yeah, and I'm old, so I'm not changing. I'm not moving away from Google when I'm searching for stuff, and I do it every day, thousands of times.
Me too.
All right, great stuff. Thanks to Jenny Horne, markets correspondent here on the network.